Hi, Mike Cohen, Carter Worth here. Of course, CNBC continues to cover the Olympics in Beijing. I'm actually joining you from Park City, where we had the 2002 Winter Olympics, actually. We saw a lot of interesting activity today. Obviously, there's a lot of macroeconomic influences going on. One of the areas where I saw a lot of activity actually goes to the conversation that we were having on Friday. SPY, which is the ETF that obviously tracks the S&P 500, we saw a huge trade in there. The April 370, 350, 330 put butterfly. Somebody bought 40,000 of those, spending about $2 million in premium. This is a bet that could be worth about 40 times that amount if it gets down to that 350 put strike. Now, the reason I mention this trade is because Carter was talking about the areas of risk to the downside in the S&P last week when we were looking at this. This person seems to be targeting about 20% from where we closed today. And another area where we saw a lot of activity was in LQD. This is the investment grade bond ETF. We saw a large put spread collar trading in this one about 60,000 times the April 120, 123, 126 put spread collar. So they were buying the 123, 120 put spread, selling the 126 calls against it. They're too not looking for a whole lot more downside, but it's important to remember LQD actually hit fresh 52-week lows today. And because rates didn't move that much, I think what's going on here is we're probably seeing a little bit more of de-risking going on more than just a pure rates bet. Carter, what do you think?
I mean, I think it's important to note that it's happening in multiple asset classes, right? You're seeing money move away from things that have worked, things that have struggled. Basically, it makes you wonder whether cash continues to build. And there are stats that suggest that the cash on the sidelines is very high, but cash on the sidelines is not a good timing tool. It can always get higher.
I've always wondered exactly where the sidelines are that all this cash is being kept, because you can invest in different things. Cash is an asset class as much as anything else. One of the areas where we've seen huge outperformance actually for a while now are in some of the food companies like Tyson and Hormel. Tyson just announced earnings, and the earnings numbers were pretty good for the second straight quarter, and the stock popped as a result. But today we were actually seeing a lot of bearish activity in Hormel. We actually saw a buyer of 1,000 of the Feb. These were weekly, so it's the 25th weekly 46 strike put for 50 cents. What are you seeing in Hormel here?
Hormel, it's stalled, but let's first look at a very long-term chart. It's a shocker in the sense that this is going back to the beginning of sector data for the S&P. Your yellow is Hormel. Green S&P, and then pink is the S&P consumer staples sector, of which of course Hormel is a part. So things like Procter and Colgate and Coke. Now that kind of outperformance is remarkable. There's no doubt about it. But if I flip now to a different time frame, what you see here is quite the opposite, right? And we know that the S&P obviously has got a lot of tech influence of late, but Hormel is basically stalled, a great champion that is showing no life. And so just a final chart on HRL, I've drawn the arrow down. Basically, the stock's the same price it was in 2019. It's a slow growing consumer staple, spam, potted meat, I guess, and I think there's risk to the downside.
Yeah, it's interesting that we saw that activity and actually when the expiration of those options was chosen, because this is a company that's actually going to be reporting the first week of March, and yet the bearish activity is even more short dated than that. So one of the names that actually has not been performing so well in the retail space, even though we've seen a lot of retailers actually reporting some pretty good numbers, is ROST stores. We saw well above average put activity in ROST stores today. You're seeing something in the charts there too.
Yeah, the thing that jumps out, of course, is the same circumstance, a great winner that's stalled. So let's first look at the here and now. Ross has been basically going down, albeit in a gentle manner, but going down for the better part of 10 months. Second, when so many things bounced, it couldn't bounce on a day-to-day basis. Now, if you look at this long-term chart, this is the arithmetic chart. And I've drawn the trend line just connecting the lows. That would imply something as low as 78. Now here's the log chart, all data, the next one. And what you see here is we are flirting with a break in trend. So any break here, any weakness here would represent a break in the all data log trend. And then the price objective would be what we saw on the preceding chart, which is a move to the trend line on the all data arithmetic chart.
This obviously not looking that great, but one of the areas that is continuing to look pretty good is in the commodity space. You and I have spoken now for several days in a row about gold. Gold continues to shine today, and we saw a lot of bullish activity in several related areas. We saw bullish activity in several of the individual mining stocks and a lot of bullish activity in GDX. This is the ETF that tracks the larger miners. There's also a junior ETF. What we saw was a purchase, among other things, of 60,000 of the September 45.50 calls. Now, take a look at where this closed. It was about 33 bucks a share for GDX as of the close today. So this is way out of the money. Now, I want viewers to bear something in mind. This could, of course, be a bet on some kind of a hyperinflationary event where they're expecting GDX to just blow the doors off. But I would also point out that this trader is actually spending a very small percentage of the distance between the strikes. GDX does not need to rally all the way through that $45 call strike in the near term. So if it rallies significantly in the next 60 to 90 days, the value of this call spread will increase even if it doesn't get through that $45 call strike. What are you seeing in GDX, Carter?
Well, it sets up well. Let's just draw some lines. So here is the GDX. Now, of course, it's many different mining stocks, but Newmont and Barrick represent about 30%. As I've drawn the arrows anyway, I think we're going to approach that downtrend line that's been in effect for the better part of 18 months and then push through it. Now, you also notice how it forms those lows and keeps holding. When you get down to a 52-week low and you hold, and you approach it and you hold, at some point what you're seeing is that there's a buying a level, a buyer's interest at that level that keeps returning. I think this is asymmetric, little to no downside and plenty of upside. Now, one way to consider this, if you look at the next chart, is a comparative chart of gold, which we know has been very good, versus the miners. So you've got gold as measured by GLD in pink, and you've got GDX there, so a two-line comparative chart. Now, this is where it gets interesting. If you hold GLD as a constant, you'll see on this next slide the relative performance of GDX. GDX has been underperforming, we know that, and yet it's starting to base and bottom. In the final chart, I've drawn a minor, slight little downtrend line, which you can see in slight blue. It's meant to be slight and almost not perceptible, but we have just broken above that downtrend line. And so if you want beta, and remember this is very important, you will not get it in the sense of the commodity as you will get it in an operating business that are highly levered, a lot of debt, and when they go, they go.
Yeah, GDX is often, in fact, the individual miners and GDX sort of more generally are frequently thought of as sort of a levered way to make a bullish play on the metals. So I think that's a pretty interesting follow-on activity that we're seeing in the individual stocks and in the miners ETF to what we were seeing in GLD and in the commodity itself late last week. I'm Mike Coe. Really appreciate you guys watching our web extras. We're going to bring you some more through the end of this week. Carter?
That's right. And if you have any questions or concerns, as always, be sure to comment, send us a tweet. And if you'd like to be alerted automatically, we post our next video, subscribe and hit the notification button. You'll get all the things you want. Have a great evening and trade well.